All right, hope everyone's doing well on this beautiful Saturday morning wherever you are. It's beautiful where I am. Got a whole lot of things planned for the weekend. A lot of that revolving around uh, getting some work done. And when I say work, I mean like bettering myself, bettering my body, bettering my mind. So that'll involve a lot of charts, a lot of gym, a lot of good food, a lot of protein, a lot of steak, things like that. But for now, um, we're going to be talking about structures that precede large moves. We're going to use Bitcoin as a proxy for this concept. And then I'm going to do WGMI, the Bitcoin Mining Index. Let me just start off by saying the sector is as bullish as Bitcoin was when it was $25,000. And I'm going to prove that using structures, using the four different measures of the technical strength and merit of a chart, in my opinion. It's my opinion, it's not a fact. There's a lot of social capitulation going on with the miners, and I understand why. I've been bullish on the miners for a while, and that hasn't worked out up to this point. They've been severely lagging Bitcoin, specifically MicroStrategy from Cycle Bottom. For those of you who've been following me for a while, have always, I believe, heard my philosophy or seen it in terms of Bitcoin as a number one allocation. MicroStrategy was number two up until last November, and then the miners were three. Now, for me, it's miners two. And I'm going to get into why that is here. I could obviously be wrong. But let's jump into it. I'm doing an in-depth series for the subs and the members on the strongest technical charts in the Bitcoin mining amongst the top market cap miners. Okay, and I'm going to be posting, let's see, a video probably in two or three series because there's a lot to go over on Iron, Cipher, BitDeer, Cores, Riot, Wolf, Mara, CleanSpark, Hive, BitDigital, uh, and Hut 8. But what am I going to be doing specifically? If you recall back in, if you were following me back in September 2023, I was one of a minority that was really, really bullish on Bitcoin, on Bitcoin for a variety of reasons. And to understand where we're going, we need to understand the principles in which what got us here. Okay, that's the concept here. What are the principles that got us here? Forget narrative, forget what something has done, because that has no impact in my mind on what it may do in the future. I don't care what something has done. I'm here to impact my future and the the asymmetry that I see in something from this point forward. I don't care what's happened in the past. And so when when I bring myself back to Bitcoin back here when everybody was bearish and claiming that we topped at 30,000 and the majority was saying we're going back down, I was saying the opposite. This is the time to get the most bullish. Why was I saying this? And this is important because I'm going to transpose everything that I'm talking about with Bitcoin. I'm claiming that the miners are where Bitcoin was in the 24, 25, $26,000 range. Okay. And so it's important to paint to illustrate what the field looked like then and then transpose it into what I feel the field looks like now. I'm going to do that with WGMI. And then the subs videos are going to go into detail on these concepts on every single miner that I just mentioned. And I'm going to rank them in terms of their trend strength, their Wyckoff strength, their cloud strength, and the Elliott wave strength. I'm going to total those up and give each of the miners a total score. And let's just do that with Bitcoin back in September 2023. Let me give you a total score. This is how I formulated in my mind the strength of what was going on at that time. Uh, and so when I think about all these elements, I think about, let me first and foremost, I think about this. I think about high time frame. Where are we uh, in the context of a downtrend, an uptrend, a bottoming process, a topping process? I like to use Wyckoff, various schematics. This schematic here is the accumulation schematic one. And at the time, Bitcoin's price very closely mimicked what you'd expect to see in the early stages, early stage exit of an accumulation schematic with a spring event. Now, the key here is a spring event. The schematic 2 doesn't have a spring. I'm going to get into what all that means in a minute. But the point being is after spring specifically, we see impulses. And the reason we combine Elliott wave with Wyckoff and trend analysis is it zeroes in on not only where we are in the phase, in the event, in the schematic, in the process, in the bottoming, in the completion of a bottom, but it triangulates on it from multiple standpoints because I can't rely on one thing on its own. We've seen that with Elliott, a lot of the Elliott wave pure analysts coming out of the bottom in August of this year didn't see 5 clear wave moves, and so we're saying it's not. There's no impulse that's coming. Well, I gave you my case for an impulse is coming and had already started. Okay, and so we need more than just one of these things on their own. So often when we see these springs, it's much easier and the counts are much cleaner. And we look at the spring and we look at the sign of strength. This is essentially a first major impulse on a high time frame. It's not all that complicated. 1, 2, 3, 4, 5. And then this is the first major impulse. When you don't see springs, and I'm going to get into that with the WGMI chart, it gets a little bit more murky because the corrective phases can last a little bit longer and they can get dragged out and they can confuse a lot of people and they can frustrate a lot of people. And even with this setup, a lot of people were frustrated. Not me, though. Why wasn't I frustrated? Because let's zoom back in, okay? Let's zoom back in. We had a very clear preliminary supply area, a selling climax, an automatic reaction, AR, secondary test, and then spring event. Let me get all this in the picture. We had a spring event with the FTX, and those spring events are typically marked with the worst news, and the FTX blew up and it was all over. We had this little test. We launched out of it impulsively LPS, and then we had another impulse LPS, sign of strength back up to LPS, sign of strength. And where do these sign of strengths pushes happen? See this preliminary supply up here that I'm marking off? That selling automatic reaction off the preliminary supply, that pivot point is typically where you'd see the market kind of find some resistance, and that's what we saw here with sign of strength. That led to a flat correction. And so we had 1, 2, 3, 4, 5 very clear 5-wave moves here, okay? This is an Elliott wave 3, and I rank these trend, Wyckoff, cloud, Elliott wave. On a scale of 1 to 3, 3 being the strongest, we had a situation back in September of 2023. Mind you, this is where this score is coming from, because I believe this is where we are with a lot of these miners. We had an Elliott wave total of 3 score because I had 5 clear waves and I had an A, B, C flat correction. Okay. Let me get rid of those drawings. Next, let's do trend analysis. And those that have been following me know that I use the 30-week. These are Stan Weinstein's principles, not mine. How to Profit in Bull and Bear Markets, great read. But basically saying the point of maximum return is the early stages of a stage 2 uptrend. Stage 3 distribution, stage 4 downtrend, stage 1 basing, and that's all based on what this 30-week is doing and where the asset is in relation to it. Downtrend, downtrend, basing, 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 same type of thing you'd see at a accumulation bottom. And then you get a check back to this 30-week. That's a point of maximum asymmetry at 19,000. We then got another check back to it, but it breached and spent 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks under it. So at this point, From a trend perspective, the score here would be a 1 because you're under the 30 week. And so this is in doubt, if you will, in doubt. And if you use that on its own, would have failed you because, again, from a Wyckoff perspective, this was just consolidating in a sign of strength back up to last point of support area as it relates to this entire accumulation range. So that got a 2 on the Wyckoff out of 3. And why is it just a 2? Because we haven't broken out into expansion. Expansion is a 3. Consolidation at or near this preliminary supply is a 2. And anything under, still in this accumulation range, is a 1 in terms of how I score those. So coming back to the scoring on the trend, I gave this a 1 because they're under the 30 week. We breached the cloud. This is a weekly chart, mind you, and so that's a 2. So anything under the cloud is a 1. Anything in the cloud or touching the top of the cloud is a 2. Anything above the cloud would be a 3. So the total score, if I add all these up, and this is my own, this is no, I'm not a financial advisor. This is my own formula that I've used, and I'm sharing that with you. It could be right, wrong. That's just my interpretation. The total here is 8 out of a possible 12. Okay, that was what I would score all the technicals on this chart back in September of 2023. Now let's jump to WGMI. Okay, just to kind of give you a hint of what I'm talking about. And let's do the same exercise. And why this is more frustrating, in my opinion, is we're dealing with a different type of bottoming structure, a prolonged corrective a longer high time frame 1-2 correction, where the spring event that I shared with you on Bitcoin led to a clear 1 ABC 2 and then into expansion. Whereas the mining index here, WGMI, is more closely resembling a 2 schematic where you didn't have an LPS or a spring event. What it most closely resembled was this 2 schematic, and I'm going to share that with you for a second, where you had a secondary test in phase B. This was the impulse, and then this massive flat correction, a massive flat correction that lasted a lot longer, and still in this sign of strength back up to last point of support, just previous to expansion. And this expansive phase is most closely associated, in my opinion, with a major third impulse, which is right where Bitcoin was at 24, 25, 26, after it completed its 2 correction and went into its third major impulse, which took it up to 70,000 plus. And so where's the proof of this? Well, let's do the exercise. If I look at the mining index, WGMI, we have a preliminary supply, check back, PS, check back. Then we have a selling climax, automatic reaction, automatic rally, automatic reaction. Then a secondary test in this phase B, and then we had our first clear impulsive movement. And 1, 2, 3, 4, 5. And in this diagram, that's a leading diagonal. And we saw that here, 1, 2, 3, 4 overlapping, right? 4, and then into 5, which I'm calling this first impulse. From there, the picture has been a lot less clear. And that's part of what goes into the Elliott wave scoring here. The Elliott wave scoring on this chart would be a 2 as opposed to a 3 in the Bitcoin chart that I shared. But I've redrawn this count based on this analysis that I'm doing this weekend, quite frankly, where I see this as a 2, a minor 2, and then 3, minor 4, and then 5 of a larger degree leading diagonal 1, and then A, B, C, and 2 potentially isn't even complete yet, folks. Isn't even complete. And for the subs that have been following me, I've been projecting two different paths, and it looks like we may be taking a stab at the second path I've been looking at as a potential compound swing opportunity down here. I've had this red path outlined for the better part of a month and a half, I believe, and we may be taking a stab at it. But this count to me makes a lot more sense in the context of the Wyckoff structures that we're in when I look at this two schematic, where again, the major one in this entire schematic is the first poke up at SOS, okay? And this major one into the bottom of major two is this sign of strength area prior to phase E expansion, which is going to be that major third impulse. Again, that aligns with what I'm talking about and what I'm illustrating here from this chart if we go back to its entire inception. And so let me just clean that up, and so what we're concerned about now is where we are and how I rank this technically. And so if in fact, forget my wave counts, just looking at price consolidating in this region at this preliminary supply region aligns with what you'd see in a large-scale accumulation event, PS, SOS consolidation at this price level. And so that gives us confluence from a second standpoint. I give this Wyckoff score a 2 because we're not in expansion yet. I give the score on trend, I give it a 1. Why do I give it a 1? Because we're below the 30-week. We're below the 30-week. As we can see, let me zoom in a little bit here. 30-week breach this week. We're touching the cloud. We're in the cloud. So the cloud gets a 2 score. If we were below the cloud, that would get a 1. But again, what we'll notice in this entire trend is a series of higher lows, higher lows, higher lows, higher lows. We've breached the 30-week many times. We haven't gotten material closes below the cloud at all. Maybe 1 week here, 2 weeks here. We're talking about going back to what is it, 2023 here. And so overall, the high time frame structure is intact on the bullish side. The Elliott wave score, because it's not as clear as the Bitcoin chart that I shared, is also a 2. The total score here is a 7. Okay, so 7 on a technical score chart versus where Bitcoin was back at in 2023 in August through September was an 8. So very similar from a technical picture and objectively using the scoring metrics as Bitcoin was there prior to its making its major third move. And so, folks, that's the video. That's what's going to be coming this weekend in terms of every single miner that I just called out. I'm going to be doing the same exercise for. I'm going to be assigning scores to. I will also say in that exercise that I don't recommend using that for your education in terms of allocating and changing positions. I'm allocated to WGMI. I've divested any single minor positions and just allocated to WGMI because I don't want to worry about what I'm talking about. So I say that just out of full transparency. WGMI in this entire exercise is towards the middle or lower end of the scoring as I compare it to some of the other miners, individual miners, but that's okay. Why? Because again, I don't think a technical picture of where something is now necessarily is going to correlate with where it's going to be. And where's the evidence of that? Well, NVIDIA. If I do the same exercise, NVIDIA back at the same time with Bitcoin, let's see here. Let's do it. August 2023, from a Wyckoff perspective, from a trend perspective, had a higher score than Bitcoin. Why? Because of this. We were in expansion. This is NVIDIA weekly chart. Okay, we broke out of the entire accumulation range. We were in expansion here. Very clear Elliott wave counts into a flat correction. above the 30 week, above the cloud. This had a higher score than Bitcoin, okay? At the time of that Bitcoin ranking. What were the forward returns from, let's just do August 14th, 2023 to now? 229%. What were the forward returns of Bitcoin? Let's do the same thing. August 14th to now, 268%. So the technical picture for NVIDIA using these same metrics was higher and better, yet the returns for Bitcoin from that point were higher. So please don't subscribe thinking that you're going to get some information that's going to help you reallocate the portfolio, because I don't believe that is necessarily to be true. This is just more education and a unique perspective that I don't think a lot of people are offering. And so with that, hope you have a great rest of the weekend, folks. Take care.